In order to understand how general ledger accounts interact with Cindy, let's start with an example. Suppose a loan of $50,000 is granted at 5% interest, and the loan was started on January 1st, 2015, and it is going to mature on January 1, 2016. So that the term of the loan is 12 months. And it is amortized over 12 months period so that the balance will become zero at the end of 1 year, which means that the borrower will be paying a blended payment which will contain a portion of the principal plus the interest due, and Cindy calculates the monthly payment as $4,280.37. If we look at the amortization schedule, we see that $50,000 was the balance on January 1st, 2015. On February 1st, 2015, the borrower is supposed to pay $4,280.37, out of which the interest is $208.33 and the principal is $4,072.04. So the balance will be $45,927.96. Then comes the next payment date, which is March 1, 2015. And again, the borrower pays $4,280.37. The interest is less this time. It is $191.37 because we have calculated the interest on the balance, which was $45,927.96. And so the remaining from the payment, which is $4,089, will be the principal. This way we see that as we go from month to month, the principal component of the payment increases and the interest component decreases until we come to the last payment, which is January 1, 2016, and the balance is zero after the payment, but the interest is $17.76 and the principal portion is $4,262.66, which was the balance on December 1st, 2015. So the borrower has returned $50,000 in principal and has paid $1,364.49 over a 1 year period. So this is how the amortization works. Now let us go back and see how the general ledger will treat these transactions. Here's a chart of accounts for sample financial company. Cindy uses only a few of these accounts. For instance, when a loan is granted, we usually write a check for the loan amount. In this case, we will debit loan and credit bank. For the $50,000 loan in our example, the entry will be January 1, 2015, payment to the borrower, debit 1040 loan, $50,000, credit 1020 bank, $50,000. However, if the loan is granted in kind, as we have learned in the tutorial on templates, you will credit some other account instead of the bank. For example, if you finance the sale of your products and services, you will credit a sale or a revenue account. The loan has been advanced and we come to February 1st, 2015, when the first installment is due. As we have seen, we will bill $4,072.04 for principal and $208.33 for interest, so that the total payment will be $4,280.37. Thus the entry will be February 1st, 2015 billing, debit 1300, receivable from borrowers $4,380.37, credit 1040 loan $4,072.04, credit 4200, interest income $208.33. Finally, when the installment is received, Cindy generates the following entry. February 5th, 2015, borrower receipt, debit bank $4,280.37, credit 1300, receivable from borrowers $4,280.37. Please note that Cindy acts as the accounts receivable subledger and all transaction details are stored in Cindy. If you have accounts receivable module in your accounting package, it should be used strictly for non-Cindy related transactions. The accounts receivable control account in the accounting package should not be touched by Cindy, otherwise the control account will not remain in balance with the subledger. That is why account number 1300 was set up in Journal Ledger to keep track of Cindy related transactions. Let us now see how to update the chart of accounts in Cindy. Go to Setup menu from the main menu and click GL Accounts to open the screen. If you go to the Finder, you can see the list of all GL accounts that have been set up. So take for example 1020, and it is the bank. Account type is asset. It could be liability, equity, revenue, or expenses, and it is basically an asset, and the normal balance will be debited to the journal ledger. And you can save it, you can add new accounts, and it's a very simple screen.